My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer. Other people want to make friends? I'm just trying to save you some money. My job is not just to entertain you, but to educate and teach you, so call me at 1-800-743-CNBC or tweet me at Jim Cramer. What can I say about the end of this first quarter other than good riddance? Another nasty fake-out day today where things look pretty sturdy at first, but ended up terrible, just like this miserable quarter.
The House of Pain.
Dow dipping 410 points, S&P shedding 1.60%, NASDAQ declined 0.95%. The Dow Jones Industrial Average had its worst quarter ever. The craziest thing, though, truly crazy, do you know what could have been a lot worse? All sorts of stocks have roared since the bottom a week ago. S&P rose 19.9% at one point last week, and we're now leaving the quarter with almost as much hope, certainly this morning we had it, than despair. How is that possible when this pandemic's raging and the economy is in dire straits? Simple. After a vicious move down, and this decline was as vicious as anyone's ever seen it, investors tend to regroup. They figure out what they can make peace with, but what's too toxic to touch. The ones they made peace with have stabilized and can actually rally on good days, but they may not have bottomed, but you know exactly what I'm talking about. Days like today, they're going to give up the ghost a little bit, but there's some terra firma there for some of these companies. The question now, are the stocks that led us in last week's rally the ones to buy here? I call them the major chords. Or will we have to switch back to the minor chords as we get more brutal coronavirus data? Tough call. We're dealing with an incredibly binary moment, people. Right now, we're in the midst of a biological world war. If we lose, all bets are off, except for the finest utility stocks with no earnings risk that can keep delivering in a depression. And there I like Dominion, Southern Company, and Con Ed. Think of them as insurance policies with juicy dividends. If AEP, American Electric Power, would come down a little bit, that could join it. However, I think we can win the war. And if we win the war, the future is a lot more bullish than people think, because there's been a gigantic amount of money being pumped into this economy to save it, with much more on the way, including, I hope, a kill COVID war bond that could raise $500 billion to build what we need here to be independent in the next pandemic. I'm a buyer. Like I keep telling you, we win by imposing a national lockdown and testing everybody so we can quarantine the sick and allow people who've recovered, the immune, to get on with their lives. In the meantime, we got to keep washing our hands and avoiding other human beings so the virus can't be spread. Don't make a joke about it. Think about it as starving the beast. Now, so far, we haven't done a great job of fighting this outbreak. That's not political. It's fact. We weren't ready. Like anyone can be ready for this, but we weren't ready. So why the heck am I confident that we'll win? Simple. This isn't the first time the United States has been dragged into a war it was woefully unprepared for. That's what happened, by the way, in World War II. And after an arduous slog, we ultimately beat the Axis powers, albeit with a lot of help from the Soviet Union. I think we're going to do the same thing with COVID-19. Let's be clear, though. A lot of people are going to die because we didn't take this disease seriously at first. And some people still aren't. And the reaper coming. It's horrible. The market doesn't care about the past. And in all honesty, it doesn't care about human life either. Its heart doesn't go out to anyone because the market's heartless. Heartless, but rational. And what does the market see here? It sees a total mess. We're a service-based economy. Who do we service? Americans who buy things, cars and homes and iPhones and tables and chairs and flights and concert tickets. Right now, we're not buying much of anything, aside from canned food at the supermarket, Bird's Eye, and staples. And there we get them from Amazon or Costco or maybe Walmart. The pandemic has robbed American consumers of their primary MO, consumption. Worse, a lot of people rent things, important stuff like housing. And if they can't work, then they can't pay. A lot of corporations rent, too. That may be the Achilles heel of this decline. That's what you're going to have to follow. That's the battle. That's the tug of war. Paying off the banks versus not paying. So the consumer economy is dead in the world. It's basically an induced coma. However, in a total oddity, parts of the business-to-business economy are doing very well. I'm talking about technology. What's all this mean for stock peaking in the second quarter? Okay, we're dealing with a barbell here. On the one hand, we have a list of companies that can thrive when the economy tanks, and many research houses are forecasting a 30% plus drop in GDP. That would be, you're going to study this period forever, man. You got the staples like Mondelez or Pepsi. We're going to hear PepsiCo, they like to call it. We're going to hear from ConAgra later. Yeah, man, they blew away the quarter thanks to Slim Jim and David Faber's favorite, Chef Boyardee. You got drugs like Johnson & Johnson or Bristol Myers, which was nice today. And you got the stay-at-home economy, tech plays at Zoom and Teladoc, Citrix, Cloudflare, AMD got hammered today, kind of interesting, NVIDIA. On the other end of the barbell, well, you got the stocks that can thrive once the pandemic is over, which, by the way, does occur. Think Disney, Boeing, Costco, Amazon, Walmart, Honeywell. I'm throwing in TJX because there's so many retailers going to go bankrupt, they can own everything. I'll be shopping there. I got a nice one to be. Long line, but the values are fantastic. I got a pair of black pants once for $7. Different story. The barbell's curiously imbalanced because aside from the staples and a few select techs, not many things are investable when the economy takes a huge header. You can't own the banks. They're too on the hook for mortgages. Can't own the retailers away from the big box winners. Why? Because they're being destroyed by the big boxes. Do you know they just booted Macy's out of the S&P 500 this very evening? Can't own travel or transport because it's a very long time before people trust the process of vacationing again. I was tempted for a moment to buy United Airlines as a hedge, but you know what? Travel. Forget it. Forget it, Jake. It's travel. Airline ETF down 58% this year. Most importantly, you can't touch the oils. When the posted price for crude in the Permian Basin, our main production area, is actually $10 lower than what you're seeing on the screen. It's not the 20 West Texas Intermediate, it's the 10 Permian. These prices will devastate the industry. If we don't get this outbreak under control soon, I bet oil could easily go a lot lower. No one's driving. I expect a host of natural gas companies to file for bankruptcy very soon. A foot race to the courthouse. Same with the pipelines. Don't trust any of those ones with the 10, 15% yield. That's going to be taken from you. Stay away. Even with a call from Trump to Putin, I mean, there'll be no consolidation. People say, oh, well, they'll all consolidate. Solvent oil companies know better than to buy soon-to-be bankrupt companies. They buy them in bankruptcy. They're not idiots. Now, here's the tricky part. I think we'll contain the coronavirus sometime in the next 50 days. Initially, I was going to say 30, but the numbers, the Cuomo press guy, I like the Cuomo, but holy cow, man, that's like a Stephen King thing going on there. I think that a combination of social distancing, I'm going to call it from now on physical distancing. I don't like the social. No one's talking to anybody. We just want to be far away from them. Physical distancing. But that doesn't mean we can't just we're going to go back to the old world. Instead, we're going to have to adjust to a new one where fear is still in the air, and we need to stay home much more than we used to and eat a lot of popcorn and Slim Jims. It's a world where we might need to switch back to shelter in place at any moment if the virus starts picking up steam again, because it's so evil, cynical, insidious. That's why I like the staples, and I want you to avoid anything cyclical, including autos and housing. I don't see those areas of the economy coming back anytime soon. I like Costco and Walmart because they have the balance sheets to weather this crisis while the competitors drop like flies. If Home Depot and Lowe's get hit, they're interesting too. In the third quarter, I'm betting we'll see a resurgence in consumer tech. That's Apple, Alphabet, and Facebook. No need to rush into these. I'm not trading any of them for my travel trust, but no need to rush into them. We need to make it through the second quarter. And that second quarter is going to be so ugly. I'm going to be coming out here. It's going to be like 2007, 2008 all over again. You know? Hey, I'm Cramer. The bottom line, just like the first quarter, I'm betting the second quarter will be bad. Maybe not as bad as it could be, though. 3 months from now, I think we'll be telling ourselves it could have been a whole lot worse. Still going to be very tough, though, which is why you need to stick with the staples, the utilities, and the stay-at-home economy tech stocks and avoid the oils, the transports, the travel, the leisure, anything that's involved in real estate, including the REITs and housing and the banks that finance them. And I've got others, but I think I have to do the rest of the show. Let's speak to Elizabeth in my old home state of Pennsylvania. Elizabeth!
Hey, Jim, how's it going?
It's going. It's fair to middling. How about you?
I'm doing well, thank you. I'm doing great. Okay, so I have a question for you. It's from a woman's perspective. It's about something that men probably aren't thinking about right now.
Okay.
A huge population of women depend on salons and spas for personal beauty, for things like hair color, manicures,
Right.
And all the spas are closed. So we're buying beauty care products from companies like Coty, and we're buying them off the shelf, and we're learning how to do all of this stuff ourselves.
Okay.
So I have a prediction that retail sales for beauty companies are going to spike, and that even after the salons open again, women will have learned the process, and they're going to continue to use these at-home products. So do you think that this is a reasonable assumption? And if so, do you think there could be a possible uptick in companies like Coty, Revlon, and CVS?
Okay, it's a great question. Let's approach this from the point of view of Coty is a long shot. All right, you go to the horse track. I used to bet on the ponies a lot. You go and you see someone say, "Oh man, that's a 40-1 shot. I'll put a little money on that." If you win, you're genius. Okay, but I have Ulta, and now Ulta's probably a 2.5 to 1 shot. That's probably the one I would want to be in. And then Revlon, that's like Molly No Show in the movie The Gauntlet. Let's go to Pat in Washington, please, Pat.
And a big Pacific Northwest booyah to you, Jim.
Oh, where my daughter used to live, booyah. We want to go back there. It was really great. What's up?
So, with Amarin Pharmaceuticals down over 70%.
Oh, did you see that
overnight.
off a judge's patent rule? Wasn't that something?
Yes, down to $4 as we speak, after hours today. So, even on appeal, is it worth holding?
You know what? I'm going to say at $4, that was an overreaction. I thought it might be able to jump to $6. I read that and I said, are you kidding me? The judge just decided to wipe the company out? But you know what? We live in strange times. What was that, like Confucius or something? Let me Google that. Give me Jack in Texas, please. Jack.
Dr. Cramer, thank you for taking my call.
Man, be careful. I'm a doctor. I got to do this. Like every doctor in the world is being recruited at this very moment. And I thank every doctor. I thank every doctor within like a 50,000-mile radius in New York City. Go ahead. What's up?
Well, I agree with you 100% on your analysis of medical doctors.
Wow.
I'm over 65, and dividends are becoming more important to me. I'm watching a stock whose product I use. It's at a 52-week low. In fact, it seems to have been trending down regularly for the last 5 years. But its current low, it's paying a really good dividend. And I'm wondering whether it can grow or at least maintain its dividend, why it's been trending down for so long. The stock is Hanes Underwear.
Okay, so here's why Hanes Underwear is trading down. It's trading down because it's sold in department stores, and people feel that this is going to be the quarter where you're going to realize that no one sold a lot of Hanes. I'm with you, by the way. I think Hanes is an interesting spec because it's a profitable company, and and they're not bozos. I mean, they're like a really good company. But at the same time, you have to understand when the quarter comes out, everybody's freaking out these days. It's a freak out stock. I'm kind of with you. Don't know if they can. They have the firepower to maintain the dividend, but some say so did Macy's. And Macy's scared the living daylights out of people. Watch out. ET, there's a stock called whose symbol's ET. It's not phoning home. Good riddance, you awful quarter. We're going into the second quarter with, some hope, some despair. Man, buddy, tonight, coronavirus concerns continue to dominate the headlines. So you may have missed the news that Palo Alto made a major acquisition today that puts it more in the home office business. I'm talking to the CEO about the move, along with what the company's doing to help business work remotely and for its employees. Then, if you've been to a grocery store lately, you've seen many store shelves empty. You know what was in those? A lot of stuff like Slim Jims, Healthy Choice, frozen meals, Chef Boyardee. Consumers, can they ride out the health crisis there with Gardein? And Bird's Eye is impossible to find. You can't find Bird's Eye. I like the piece. I got the CEO. It's a good company. It's called Conagra. And I'm sitting down with the CEO of AGCO to find out how it continues to keep agriculture running in a time of, let's say, uncertainty. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.